Let's get to Sarah Eisen, who is live at NRF this morning with a special guest. Morning, Sarah.
Good morning, Carl. Yes, I am here with Calvin McDonald, the CEO of Lululemon. We just did an on-stage fireside chat, and now we have him here for CNBC. It's nice to have you.
Great to be here.
And fresh off of some big news, you guys just raised guidance for the fourth quarter, the holiday quarter. What did you see over that shopping period from consumers?
Yeah, we saw success and momentum in all of our markets around the world, across both men's and women's, really across our categories. And similar to what I've been sharing, the guests responded well to our innovation and our newness, which we continue to get back to historical levels, which we will be come Q1 of 25. So a good full price business strength. We're going to come in below where we had guided to in markdowns, drove the business through innovation, full price, and really in every market we're in.
Which is why you raised sales and profitability. And margin. Question is how much of it was in the U.S. and whether you're seeing any kind of resurgence there, because that's been the pushback on the stock and the performance.
Yeah, we've talked about our opportunity in the U.S., particularly really U.S. women's. Our U.S. men's business has continued to perform well. We know what our opportunity is. It was some product decisions we made versus the consumer or the market space. We had more newness. She responded well to that. So we are pleased with the results across every market, and then obviously very focused on Q1 of 25. But we're pleased with our results in every market and saw a good adoption of our product.
But specifically in the U.S., so you've been talking a lot about newness and also expansion of sizing in terms of opportunities. What are we actually going to see in the store that's going to drive the growth back in this part of the world?
Yeah, the sizing was more about depth of in-stock as we saw the size curve shift and change. We're in a much better position there. So you'll just have depth of availability in stores would be the shift that I'd say the consumer will see. We haven't dramatically changed our size profile in stores. What we are going to continue to see is the newness in the innovation, getting back to the more historical levels that we've carried week to week in our stores. And that really, we hit that mark in Q1 of 25. We progressively have been getting better through 24, and we've seen each quarter the results of that and the way the guests has responded. And Q1 is when we sort of hit that level, and we're excited about that.
So the stock is down almost 3%. It barely moved yesterday on the guidance hike, and it's underperformed in the last year or so, down more than 15, 16%. What do you think investors are missing?
I think the stock price is a reflection of the U.S. business. We've been very clear about what our missed opportunity was, and that's the work that the team's been in, and we've shared our short-term plan based on agility to get at those opportunities and what we're doing 25 and beyond. So we're very focused on what we control, which is the performance side of the business, and I believe we're doing that. I think it's showing in the results. I think it's supporting our narrative, which is that guests are there. They're looking to convert, and we just need to bring the product back to the historical levels, and that will continue to drive our U.S. business. And doing so, the share price, we believe, will continue to move in an upward. It's moved nice since the lows of 24 back in the summertime, and I think it's just supporting through performance. And I think Q4 supports what we've said, and we'll continue to drive that.